Hilton, Marriott, Hyatt, they sank. Let's bring in Alicia Levine, BNY Mellon Wealth Management, head of equities. And Alicia, you've got a big call here for 2022 on the reopening plays. Where do you want to be within this group?
That's right. There are a couple of places we want to be. The first is really the reopening and the travel names, because I think what we saw in the last few months of 2021, when it looked like the pandemic was coming to a close, people really want to travel. They want leisure. They want travel experience, and corporate travel picked up again. And so I think when we're on the other side of this, that's definitely going to be a theme. And it seems as if, as we listen to the data, that Omicron could kind of burn through fairly quickly, and we'll be on the other side with this reopening again. And as I say, every time there's a variant, we have another chance at a reopening. So that's where we're looking. We're also looking at a CapEx cycle for next year. So we're very excited about the companies that are the recipients of corporate spending on digitization, meta, cloud, and data centers. And we think that's going to be a huge call for this year as well. We're a little bit cautious on some of the consumer names on the goods sector, simply because of the lack of fiscal stimulus, not just because Build Back Better has been delayed, but because fiscal really stopped in September of 2021. So we're seeing a huge drop-off this year. And so for that reason, all those things that we bought, the sofas, the houses, the boats, that's going to slow down this year.
So we'll get to some of those themes, but just on the reopening plays, the travel and leisure sectors, they didn't all trade the same today, which was interesting. Hotels, as I mentioned, went the other way as airlines and casinos. Is there a group that has better valuations within that? The cruises, perhaps, which get really beat up, especially on the latest CDC guidelines?
Yeah, so the cruises always give you an opportunity to get in. We like hotels. We like theme parks. We like group experiences. I think that's some of the areas that consumers are going to be interested in re-engaging. I mean, I spent a lot of time in Denver Airport over the weekend. It's packed. People are out there. They're traveling. And I don't think this is going to slow it down for the long term. I mean, yes, is there going to be an air pocket? Absolutely. But I think we're soon going to be on the other side of this.
Alicia, what are you telling your clients is the best inflation hedge in the year ahead?
So, look, we still like energy. We like certain areas of the financials. For financials really to work, as your conversation with Lindsay earlier, you need a steepening of the yield curve for that to really happen. You need to see growth in the loan books. If that happens, then we like the financials very much. It's hard to make a bold call here on that simply because it's very data dependent. We do think inflation will soften by the second quarter of this year, kind of dramatically so. It's very hard to make projections when you've had huge prints in CPI and not expect it to go higher, but that will roll over. And with that, you'll see some definitely lesser pressure on input costs as well.
I think the demand call is interesting also, that it shifts from the consumer who's been buying and investing in their homes and their hobbies to the corporate. So what benefits from an upswing in corporate capital expenditures as you see that happening?
So, look, there is so much corporate cash right now. Think about the amount of cash that companies have raised in the last 22 months with the largesse of the Fed, which was exactly what it was intended to do. Give corporate cushions for cash, for spending. We do not think that only goes into buybacks. We think there's a CapEx cycle here. In particular, we are going to have a reshoring of the supply chain. Large companies, auto companies are telling us that they are going to rebuild in America. We're going from just in time to just in case. And that is going to be all over the supply chain. So we look for CapEx spending, not just in plants and physical equipment, but also in the digital space. So cloud, data storage, and the recipients of Meta building out the metaverse. And so it sounds kitschy, but it's not. That's where the spend is. And we think that CapEx spending will be the theme of 2022.